to the program. This is Financial Focus, brought to you by the best of the best in financial services. I'm almost running out of fingers here. 9 straight years and running.
No, Peter, no.
10. I'm out of
10
fingers.
years in a row. Yeah.
10 years and running, as named by the gracious readers of the Lake City Reporter, best of the best in financial services. You heard from him, folks. John Kuykendall, founder and CEO of GulfCoast Financial Services. John, what an honor to be named the best of the best, receive that title 10 straight years and running.
Yeah, when you think about it, that's a decade.
A decade.
And 10 years straight, we've been the best financial service company in Lake City, Florida by the readers of the Lake City Reporter. And we're very honored. And yesterday we got the call saying that we had made number 10. And so we're just gracious and honored and so pleased.
Well, it's due to and a testament to the service that you've provided now actually for more than 3 decades there, GulfCoast Financial Services, helping those proactive planners and savers across and around North Central Florida put the plans together, those financially focused written retirement income plans that kind of map out the course and the path to achieving those important financial goals. John, you put a lot of emphasis that everyone should have a plan. So many have taken advantage. So many more need to have that plan put together for them.
Oh, yeah, Peter. I mean, the financially focused income plan, the income planning that we do is so important when we put all of the components of retirement together and look at the whole holistic package of everything that could happen in retirement, and certainly taxes and Social Security. In fact, there are a lot of things that are going to affect us coming forward. One of them, of course, is, as we talk about all the time, is the new tax changes. But also, Medicare and Social Security are not fully funded in another 5 or 6 years, 7 years. And so, we just found out yesterday that more and more people are qualifying for Medicare, even though they just came into the country. And so that's going to put tremendous pressure on those of us who depend on Medicare. And it's so important that we have predictable, sustainable income coming in every month for us to live on.
Yeah, that is true lifestyle confidence in
Yeah.
retirement, is knowing that you've got the paycheck just like you had during your working career, except that you don't have to work for it, that your Social Security and your assets are generating it for you. But in order to have that confidence, you've got to map out how that's going to happen. And John Kuykendall and the team there, that is what they love to do for their clients, is work through the numbers, integrate all of the different sources, and address risks, issues, and opportunities along the way. So if you'd like to get that plan put together, pick up the phone, give them a call, 386-755-9018, 386-755-9018. Well, John, we certainly are into the heat of the summer months here. And as such, apropos, we are going to be talking about the hot financial topics. Now, John, as we move through these kind of laundry list fashion here, I want you to make a comment on whether this should be talked about more, or maybe that we're hearing this a lot and it's a hot topic, but maybe not something that impacts us personally on a financial level. Number 1 on your list here was passing and inheriting a Roth IRA. I've got to imagine this one is something that should be more of a hot topic this year.
Yeah, it should be more of a hot topic, Peter. And we're talking about it to our clients, making sure that we can do Roth conversions while we can do them before they do before they get RMD eligible, retired minimum distribution eligible, and also before they get on Social Security and Medicare. But, the thing is that under the Secure Act 2.0, a Roth IRA will pass to a non-spouse tax-free. And the money comes out tax-free. Now, they have to take it out over the 10 years, but they take it out tax-free. And that's going to be so important for those future generations, because we do not want to leave them the liability of paying the taxes on something that we deferred, and having them pay it at a higher tax bracket, plus also create tremendous tax burden for them. And the Roth is certainly the way to go.
Something that we should be hearing a whole lot more about. We should be acting on. This is a hot topic, ladies and gentlemen. Those Roth conversions and contributions, and then passing and inheriting Roth IRAs. Essentially, at their core, efficient tax planning on the money that you've worked so hard for has to involve these conversations. So if you're not hearing about them, if you're not talking about them, if you're not strategized, certainly pick up the phone, give Gulf Coast Financial Services a call, 386-755 9018. On the other side of the spectrum, one that we're hearing an awful lot about, John, the AI stock craze. We talking before the program here, a little off air. It's crazy what the AI stocks and what just a handful of stocks have done for the market as a whole this year.
Well, we're looking at record closes, Peter, every day with the NASDAQ and the S&P 500. But, it's only 5 or 6 stocks. And so we've got to be aware of that. If we want to be diversified and be protected and eliminate our risk, then we can't put all of our money in those stocks because it is a huge bubble. AI, for some reason, has taken a craze, and this is supposedly the latest invention in the marketplace. And so more and more people are getting behind the bandwagon and driving those stocks up way beyond what they should be at this point. But we don't need that risk, Peter. We don't need all of our money. It's like putting all of your money in WorldCom or Enron back in the 2000s early. That wasn't a good thing.
Yeah. I read an article that was citing how in the month of June, at some point over a stretch of 5 days, the price of NVIDIA swung more than 1.5 times the entire value of Tesla. And it really didn't move all that much, but just, the movement of a few percentage points, it was measurable, certainly. But to have one company that with just a fraction of its value is basically equivalent to the entire value of Tesla. And when I'm out and about, John, I can point out Tesla products all over the place. I know what NVIDIA does in essence, but I can't walk around town and point out a single one of their products when I see it.
No. And Peter, you got to remember, this is kind of like the tech craze of the early 2000s.
The .com bubble, pets.com, right?
That's it. And it was a bubble. And 20% of the or 80% of the S&P 500 was made up of 5 stocks. And so we have the same thing now. We're in another bubble. We need to be careful. We need to be diversified, and we need to make sure that we don't get caught up in that bandwagon.
Yeah, I read another article. In fact, I've read many on the fact that .com bubble, John, was largely due simply to overweighting. That if we had a proper diversified portfolio across many different sectors of the economy, that the .com crash, the bubble popping there from 2000 to 2002 actually was not that impactful, but most mutual funds had sort of weighted themselves all in technology at the time, which at that point wasn't proven, wasn't profitable, and had that big bubble and subsequent crash. And because of that, the value of the markets and the indices as whole lost much more significant value than had they been properly weighted and properly diversified.
Oh, that's right. And, I think back when you say that, Peter, to the Jacobs Internet Fund, which, was going crazy. And then all of a sudden it just tanked. And so, that was a craze that we were caught up in. We don't want to get caught up in that craze today. We need to stay diversified. We need to know what our risk is. And, as I've always said, your risk is the number that you can sleep with at night, and that's your risk number.
And moving on, John, another item on your list, and again, I believe this one probably not in the news as much, but something that certainly should be talked about, particularly for this one, maybe higher income earners. But we are getting to the time in the year over this month and maybe the next few months where certain people have maxed out their 401k and are wondering what's next. That needs to be a hot topic for those kind of individuals.
Well, sure. I mean, if we maxed out our 401k, not just for the match, but if we've actually maxed it out for the total contribution that we can give in there. We still need to invest and we still need to put money aside. And, you may be eligible for a Roth IRA depending upon how much you earn. And that's certainly something we should do. Also, don't forget the spousal IRAs. Because if your spouse is not in an IRA or a retirement plan, then they're eligible for a spousal IRA, no matter how much you make. And we need to make sure we put that money aside for them.
And John, essentially, I mean, there are limits and limitations and caps on how much we
Yeah.
can put into certain type of tax advantaged or qualified or specific retirement funds, but there's never a cap. If your ability allows it, if your earnings allow it, there's always place to save or invest and put good money to use.
Oh, sure, Peter. We've always got a place to put your money and put it to use. Make sure that it's earning, but be setting it aside for the future. We're going to need more and more money for retirement.
All right. Next on the list, can't escape this one, John. The election has been a hot topic this year.
Oh, Peter, we're talking about the election all the time. Every time I turn around, it's a hot topic. But what we have to realize, Peter, is that I read something the other day that if the Republicans have been in complete control. I think it was like 13 years where they were in complete control of everything. And the Democrats for over 30 years. In both cases, the return on the market was like 14.57% for each one of those periods. So what they're saying is that the election really didn't have that much to do with it. It didn't have that much to do with who was in office. Now, what we have to do is we have to look at who's in office, what the politics are, what the plans are, and then we need to adjust appropriately. We know that we're going to get new tax laws in 2026 or late 2025. So we need to be looking at those, anticipating the moves and making the moves. But, the market is going to happen. Things are going to happen. We just have to learn, as the old saying is, we take the lemons and we make lemonade, because in the market, there's always some place to invest.
And I've heard that the market seems to like a mixed house where there is some checks and balances, or maybe there are two sides that end up not being able to get a lot done because they do have to compromise, which they don't do very well. And so the rules can't change. And so the market moves along sort of knowing what to expect more when one side does not control everything.
That's right. And Peter, the market will be nervous up until the election. We know that because the market likes certainty. But once the election's over, the market will settle down and we will go forward. Life will continue. As long as we keep investing and doing the things that we have to do, the market will be there for us.
All right. Hot topic, John. Meme stocks and cryptocurrencies have certainly been in the news again this year. Is this something that really pertains or impacts most people, most investors, most of your clients?
No, I mean, meme stocks are you see like GameStop go up 40, 50% and then come down 40, 50, 60%. It's some institution takes a position in one stock and then they tout it and people start getting on the bandwagon. And it's kind of like, the old musical chairs thing, Peter. At some point in time, the music stops and hopefully you're already out, because if you're not, you're going to lose money. And so it's not something that our investors or the average person should be worried about. Cryptocurrency is a different situation. It's something that eventually we're probably going to have, but it will never work until we have regulation and control on it. There has to be some way that if I forget my password, I don't lose all my crypto. I mean, that just doesn't make a lot of sense, because people do that. They lose. I'm changing passwords all the time. So I think crypto will be here, but it's going to be a long way off, and the government's got to get involved a little bit more than it has.
Haven't we sort of been on a digital transaction ledger since the inception of credit cards? I mean, cash
Yeah.
was cash, gold was gold way back. But since the inception of credit cards, haven't transactions sort of been digital anyway?
Yeah, the thing is I think 2020, the COVID era, kind of spiked it because they quit taking cash. All the stores didn't want cash because of the germs. And so therefore they encouraged credit cards, debit cards, and they encouraged us to use them. That's pulled back a little bit because now people are starting to charge us to use credit cards.
So much,
And
so
so
much. Yeah.
yeah. And so, I went to the Mercedes-Benz dealer the other day and handed them my American Express card, and they said, that'll be 3%, or you can give us a check. Well, I don't carry checks, and I didn't have that much cash, so I had to use my credit card. So that's encouraging people now to go back to paper and cash. But I think that's just a blip in the market right now due to the inflation rate we have. But we're going to go to a digital currency. Statements online, paying online, bill paying. Certainly, the banks are encouraging it. ATMs at the bank didn't come in overnight. It took us a long time to get clients to drive up to the ATM and put their card in.
Mhm.
And it took a generation probably of, younger people, which now I guess I'm considered in that group because I would use the ATM. And eventually we'll be all paperless and it'll be online transactions.
Well, I know that my mom always appreciated the paper statements and kept
Oh, yeah.
track, and that's a lost art these days. Balancing a checkbook, we rely on the digital transactions to just always get it right. Especially, I feel like among younger people that they don't double check the numbers and trust that the bank's math is just going to be right. And sometimes it's worth double checking those things.
Well, the thing about it is, Peter, certainly you should balance your checking account.
Yeah.
Now, the way I do it is I pull up my statement online and then I pull up my QuickBooks or what my banking software, and then I balance my checkbook. But I can tell you this, having been a banker for 20 years, banks make mistakes. We still have to micro key in the account numbers and the amount of the check and things like that. Humans make mistakes. There's no way that those are read completely by the machines because we have to put the amount of the deposit down at the bottom or the check. And so there are going to be mistakes, and certainly we need to be aware of that and certainly check it. Everybody should balance their checking account.
Yeah. Next topic on the list here, John, gold. This has been a hot topic. I feel like I hear about it incessantly on the radio and online, see it everywhere for 20 years. But I do feel like it's heightened a little this year. Is it something that should be as hot a topic that as it is? And how does it affect most savers and investors?
Well, certainly, I don't think it really affects us that much. I think that, you never want to physically hold the gold because you have a commission going in and you have a commission going out. So there's no reason to do that when I can buy a gold stock or buy a gold mutual fund. So what I want to do is if I want to be in gold, I want to make sure that my portfolio has it in that type of form. Now, gold goes back to, I mean, we've been talking about gold since 1985. The
Since
last
Roman times, right?
yeah.
Since
Well, yeah,
antiquity.
but especially in the United States, everybody's been saying we need to go to gold because eventually the currency won't be any good. This is going to be devalued, such that, and I'm going to barter my way with my gold coins. But I can't get enough gold coins to really sustain myself for very long. So, like I said, gold historically is not a great hedge. It's not a great inflation fighter. It's mainly the people that sell it make a lot of money going in, going out. Get you a mutual fund or buy a gold stock.
Yeah. Well, you segued into it there lightly, but inflation, the cost of living, and the Fed, another hot topic. We've heard about this for the last couple years.
Well, yeah, the Fed, the market is waiting right now. We're waiting on the Fed to come out with their meeting decide what's going to happen right now. And the market is concerned about the rate cuts and when we're going to start those. Inflation's getting more into control, but inflation's been with us forever. Remember back in who was it? Gerald Ford that had the WIN campaign, because inflation was 13, 14%. And so, we were supposed to whip inflation now. And so inflation will always be with us. It's just a matter of us keeping it under control. Raising wages isn't a way to deflate inflation. Raising wages increases inflation. And so I just read where somebody went to $20 an hour and more workers got fired. So, we can only afford to pay so much. And as we raise these wage per hour, the hamburger costs more, everything else costs more, and it affects everybody equally. So inflation's with us during retirement. It's terrible because, as you said, we're paying ourselves. We've got to make sure that we can have, as I call it, a growth bucket. So the growth bucket keeps up with inflation, and that's our hedge against inflation in the long term.
Bringing it back to the solutions and in many aspects, the basics there, that there are certain topics that will always be important, but we can't just ignore the hot topics of the day or of the moment either. We've sort of got to bring them in alignment and say, where and how do these impact the long-term foundational planning that we need to do. And John, I know that you address these hot topics. You hear about them each and every day there in your office, but you make sure that the long-term foundational plan is in place. That's how we stay financially focused.
Yeah, Peter, I mean, the plan is the key, the budget, the plan, working on the income, making sure that we've got enough income to meet our needs. And then we've got enough income coming in for our wants. And so what we try to do is look at needs and wants and put those together, put how much money you've got, diversify you, do what we can do to look at every item that's going to affect your retirement. And then be proactive going forward, Peter, as laws change, things change. We're gonna see a lot of changes in the future. I mean, there are going to be significant changes to Social Security, Medicare, taxes. We know that, and we have to be proactive and be ready for them.
Well, that's why they have been named best of the best in financial services 10 straight years and running by the readers of the Lake City Reporter. It's because the team at GulfCoast Financial Services help savers and investors better determine your outcome by having that financially focused plan in place. And specifically, if you'd like to learn about these hot topics or the time-tested standards that help to achieve financial confidence and lasting quality of life into and throughout retirement, you need to get that financially focused plan put together. Give GulfCoast Financial Services a call, 386-755-9018, 386-755-9018, 386-755-9018. And John, would be remiss as always, love to finish the program by mentioning the fact that you are a multiply published financial author. Your latest, Quitting is for Winners, but Retirement is Not for Wimps. I love the play on the title there, but the book is very serious about solving for the issues and addressing some of the hot topics and the long-standing ones that we will face into and throughout retirement.
Well, retirement's not as easy as we thought it was. Getting old isn't as easy. And so we need to be ready and be proactive in all we do. But Peter, I also understand that you were on TV. And so you're a TV star now.
Yeah. Got a kind of once in a lifetime opportunity to ring the closing bell there at the New York Stock Exchange on Wall Street. So it was pretty neat opportunity.
Oh yeah, what a great opportunity, Peter. It's nice to know that my co-host is a celebrity now.
Well, and I did not personally get to ring the bell. I will say I got the invite to be there as part of the ceremony, but it was pretty interesting being there where all the traders are. It was not as loud or as boisterous as I would have imagined, John. Seeing it on TV and in the movies, they're always crazy and throwing their ticker tape and their orders and shouting at one another. It was actually pretty quiet and subdued. The news was broadcasting live right there on the floor, and nobody was shouting to disturb them. So I guess more is done on computer digitally these days.
I think so. I think we don't have as much paper and there's more digital going on. Well, that's great, Peter. Hey, you have a good week, okay?
Always a pleasure, John. And reminder, folks, stay financially focused. Get the financially focused written retirement income plan put together. This is, no matter where you are at in your financial progress, going to help you keep on target and make sure that your plan, your dollars are working to help you achieve the goals that are important to you. So if you'd like a copy of that book, Quitting is for Winners, but Retirement's Not for Wimps, or if you'd like to get that plan put together, or if you've got just a couple quick questions that have been on your mind, pick up the phone, give John and the team at GulfCoast Financial Services a call, 386-755-9018, 386-755-9018. John, always a pleasure.
Thank you, Peter. Great to be here. See you next week. Hey, if you'd like a copy of our new book, Quitting is for Winners, but Retirement's Not for Wimps, I encourage you to click the link below and get your copy today. Hey, we like it when you listen to the show, but we like it better when you like, share, subscribe, or feel free to leave a comment.
Be sure to like, subscribe, share, and tune in for more financial focus by visiting GulfCoastFinancial.net. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kuykendall is registered with and securities are offered through Kovac Securities, Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through Gulf Coast Financial Services, Inc., a registered investment advisor in Florida. Gulf Coast Financial Services, Inc. is not affiliated with Kovac Securities, Inc. or Kovac Advisors, Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors, including changing market conditions and/or applicable laws, the content may no longer be reflective of current opinions or positions.